Hello, everybody, and welcome back to Bitcoin News Weekly Live. I'm your host, Rob Wallace. We got a big show today. We got a guest, Trey Sellers from Unchained. Lots to dive into. We're talking Vanguard, Bank of America, Charles Schwab, all capitulating, bending the knee to Bitcoin. Institutional adoption is here. This is just getting started, but what does it really mean for Bitcoin? All right, let's dive into the intro, and then we can get on with the headlines. When sentiment is down in Bitcoin, like it is right now, even the best news can go unnoticed. But this past week may go down as the most important of 2025. What we witnessed was the complete capitulation of some of Bitcoin's harshest critics, a bending of the knee from the titans of Wall Street. Vanguard, the fortress that built passive investing, spent years telling its clients Bitcoin was speculative, volatile, and unfit for a long-term portfolio. And yet this week, 50 million Vanguard customers woke up to find Bitcoin ETFs quietly unlocked inside their brokerage accounts. Then came Bank of America, a firm that once told advisors not to even say the word Bitcoin unless a client brought it up first. They're now instructing 15,000 advisors to actively recommend a 1 to 4% allocation. And to round out the week, Charles Schwab, overseeing more than 12 trillion in assets, announced that they will enter the spot crypto trading market with the clear intent to do what they do best, slash fees to near zero, and take on the entire crypto exchange ecosystem with cheaper, faster, more seamless execution. 3 pillars of legacy finance capitulating all in a single week. But with it comes a question the Bitcoin community can no longer ignore. What world are we moving toward? There are 2 visions of the future this week that helped make more clear. The first vision is the one that Hal Finney predicted over a decade ago. Bitcoin as high-powered money, the reserve asset banks use to settle with each other, while the average person interacts only with digital Bitcoin IOUs wrapped by familiar institutions. Or does the sovereign individual vision survive? A world where everyone holds their own keys, runs their own node, and Bitcoin remains a tool of freedom instead of another tool for legacy finance. Because as Simon Dixon warns, every Bitcoin sitting in a custodial structure strengthens the ability of banks to build layers of paper claims on top of it, recreating the same fractional reserve world Bitcoin was born to replace. Which path wins? Is this institutional embrace the validation of Bitcoin's identity, or a sophisticated attempt to cage the beast? Maybe the future is a hybrid. Bitcoin becomes institutional at the core, but remains sovereign at the edges. A 3-body problem, where both worlds orbit each other in an unstable, unpredictable way until they collapse into a new equilibrium built on Bitcoin settlement, whether the banks want it or not. The great capitulation of Wall Street is complete. Rather than fighting and demeaning Bitcoin, they're fighting for the fees you pay when you buy Bitcoin. Now comes the real question. Will the Bitcoin community bend to Wall Street or hold their keys? The battle for your seed phrase and the future of money is more apparent than ever. All right, everybody, we got a great show today. We got the man himself, Trey Sellers from Unchained. How you doing, man?
I'm doing great. Thanks, Rob. I really appreciate you having me here.
Absolutely.
Great intro, man. You're getting me all pumped up.
Yeah, dude, that's the point. Monday morning, we come here, 11 a.m. We got a new guest every week, and we break down our newsletter. Bitcoin News Weekly comes out 7 a.m. Eastern, hits your inbox, gives you all the headlines that you need to get caught up with Bitcoin, so you don't need to spend your whole entire life scrolling on X like I do, right? I'm saving you that misery of being tied to Elon Musk platform. No, I love it. I kind of would be doing it.
It's really enjoyable, and sometimes I feel like I'm pulling my hair out too. So I get you.
I do love it. I'd be on there anyway all the time. So it's my pleasure to be able to provide this service to the people. But for anybody who is new to Bitcoin and doesn't know Trey, tell us who you are, what do you do, and what is Unchained?
Yeah, thanks, Rob. Well, I've been around Bitcoin for quite a while. I first bought a little bit back in 2014. For some people, you might consider that an OG. I am definitely not an OG because I did not have any idea what I was buying back then. I bought just a little bit of it. I held on to it. I still have those sats, by the way. But there's a very big chasm between the OGs of who really understood Bitcoin and got it super early and were able to accumulate a large amount of it, these whales that we're seeing apparently dump a lot of Bitcoin into the market, that's causing some headwinds here. There's a very big chasm between them and between me. So don't get the wrong idea here. But I came from kind of a libertarian background. Bitcoin started to make sense to me over time as I delve deeper into it over time. It's like one of those things that you need multiple touch points for most people in order to actually grok it, and in order to actually understand the value proposition that it provides and how it can fit into your life and what your goals are and all of that kind of thing. Anyway, long story short, I came from a banking background, financial services. I worked at Deloitte Consulting in the financial services and banking section of their technology practice. I worked at Goldman Sachs for 3 years. I worked at Truist for which came from the SunTrust side of their merger with BB&T, and I was there for 6 or 7 years. And so I've got a pretty deep and extensive background in banking, financial services, and capital markets. That gives me kind of a unique perspective on what's going on in the markets and how Bitcoin fits in. So I really love kind of following what's going on there. I wouldn't consider myself some kind of deep expert with deep insight on all of the backdoor mechanisms that are happening there, but I feel like I can add some interesting insights when it comes to market movements and what's going on there.
Absolutely.
And then I've been at Unchained for about 4 years, and Unchained is the leader in what's called collaborative custody, and it sits at the foundation of everything that we do. And it really connects very deeply to the monologue that you're giving at the beginning. This question about whether or not Bitcoin will just kind of be captured like gold has been and used only in what you refer to as high finance and just controlled by the elite few who are issuing credit on top of it, or will it actually be accessible and held by individuals and by families and by companies who are controlling their own keys, or at least have a much tighter control mechanism on that Bitcoin by controlling it directly. And Unchained is there to help people make that process easy, so that it's fault tolerant, so that they can access financial services with that key infrastructure in mind, and they don't have to trust other people with the custody of their Bitcoin. So that's the super high level 50,000 foot view, and we cover a lot of ground at Unchained, but happy to dig into all the different financial services that we offer.
Yeah, absolutely. So I think it's so great to have you, somebody with a traditional finance background, as we've got Nima in the chat saying, you come from traditional banking and Wall Street, you can decipher some of these movements that are happening, because I mean, the headlines say one thing, but the motivations, the incentives, and what's really pushing the market forward is a completely other thing. So great to have your insight there. Unchained is a wonderful company. I highly recommend anybody who's looking into doing collaborative custody with a quote unquote institution should definitely look into Unchained, because they offer great service and are trustworthy. Great dudes, great guys.
Yeah, I appreciate that. Look, going back to your monologue very quickly, and then I know you want to get into the news items. It doesn't have to be either or, right? Like Bitcoin doesn't have to be just consumed by traditional finance and controlled by Wall Street, nor does it have to be totally 100% self-custody, everybody controlling their own keys. There's going to be a spectrum. There is a spectrum, and we should encourage that. Bitcoin is for everyone. It is for banks, just like it is for individuals, and people will interact with it differently. And so, our job at Unchained and people who care about like the sovereignty aspect of Bitcoin, our job is to help make this process easy for people and to help make sure they understand that it's possible and understand the benefits of doing so. So I firmly believe that we're going to see a wide spectrum of the different services and the way that people interact with Bitcoin. All of those things are good. We need a big tent approach here.
We do. Bitcoin will not become the world reserve asset if it is not adopted by banks, sovereign wealth funds, large
100%.
institutions. And the beautiful thing about it is that you can hold it yourself as a person and completely in a sovereign fashion and be able to go anywhere in the world with it, stored in your brain, put it back into a wallet once you get to the new location, and boom, you got your money right.
Yeah, the important point is that it is an option. Bitcoin makes this available and possible for you to actually hold the keys to your wealth in sovereign custody and not have to trust a bank or a government or a corporation of any kind with the value that you want to secure for your family. You didn't have that before. You can't do it with gold. I mean, you can do it with gold, but only in small amounts. It's very difficult to move. You don't necessarily know if you actually own gold. So like real gold, I mean, as Peter Schiff showed us on stage the other day with CZ, that was funny. The world has not known an asset where you can have full unilateral sovereign control over it until Bitcoin. And the possibility of that being there opens up so many doors for people to actually take sovereign financial control of the money that they own and not be dependent on somebody else to give them access to it when they need it.
Let's go. That's why Bitcoin will replace gold in the long term and hit that 30, 50, $100 trillion market cap that we all believe is possible. So thank you everybody for tuning in. We got a bunch of people in the live chat over on YouTube. We got Lev Dog. Let's go. We got my boy Kyle. It's a great way to start the week. If you are on YouTube, hit that like button. Helps a lot. And if you're watching on X, share this stream. We got a bunch to dive into. So let's do it. We got our newsletter right here. Bitcoin News Weekly comes out 7 a.m. Eastern every Monday morning. 9 trillion and an apology. Wall Street holdouts bend the knee. Vanguard, B of A, and Schwab finally embrace Bitcoin. So this is the big market news that I would really love your insight on. But before we do that, let's hit some fun things here. We start off with the adoption section, and great to see how Bitcoin is spreading around the world, hitting culture in different ways. And so first off, we got Spar, one of Europe's largest supermarket chains from Switzerland. Switzerland loves Bitcoin, very Bitcoin forward country. They now accept Bitcoin and other crypto directly through its Swiss app, replacing third-party processors with fully integrated on-chain QR payments. So I think the real magic here is watching the video, seeing how it looks, what the app looks like. You can go to Spar. I mean, this is a Swiss grocery store, high-end, nice stuff. You open up the app, you say, how do you want to pay? I want to play with my Spar crypto card. And then you can choose, look at all these wallets. These are wallets we know and love, right? Wallet of Satoshi, Phoenix, Blink. Blink's a great wallet. Not really that popular in America, but a great wallet. Highly recommend. Aqua, Zeus. And so your Lightning wallet hits right in the back end of this Spar grocery store app. This is the future. This is so cool. Would you spend a Bitcoin on your groceries if you could today, Trey?
Yeah, absolutely. I spend Bitcoin when I have the opportunity to do it. I was at Steak and Shake a couple of weeks ago, actually. Got lunch over there. I gave them sats for sure. Is that like, an everyday occurrence for me? No, I wish it was. I wish more people accepted it. Square has definitely made some progress on that front, and we'll see how that plays out. This looks really cool, though. I mean, yeah, it is nice to see these Bitcoin native apps that are, that you would expect to be kind of the powerhouses behind moving sats, especially in a sovereign way, like Phoenix Wallet, like Breeze. I've used Wallace Satoshi in the past. I've got a lot of these apps downloaded on my phone, so good stuff.
Yeah, exactly. I've got like 6 of these, right? But so cool. Great to see it being pushed forward. Of course, Lugano is a Bitcoin hub over there in Switzerland. You got the Plan B network, Plan B forum happening there on a biannual basis. The Plan B business school, lots of cool stuff going on over there in Switzerland. And they also
I was in Lugano over the summer. I was visiting Italy with my family, and we were up near Lake Como and shot over to Lugano. It's beautiful, by the way. And I got a picture near the Satoshi statue and all that before it got ripped down. I think it got replaced though, which is cool. But yeah, man, it's awesome over there. Next time I go, I'll be looking for a Spar supermarket.
There you go. And then when you want Bitcoin on your finger, we got this new thing, Mood Ring. They integrate with TradingView, so your ring can give you real-time haptic feedback on Bitcoin's movements. So, I mean,
that's dangerous.
Yeah, did you see this video?
No.
This thing is nuts. Yeah. It goes and down to red, and it will buzz on your finger and of course it's with TradingView, so you can get all your poo-poo coins tied to it as well. But of course, we would only care about the Bitcoin price going up and down. But that would drive you mad, wouldn't it? To have TradingView is enough on your phone or your computer to have to deal with it on your
I definitely don't need my finger buzzing with Bitcoin going down as it has been.
But we're staging a rally, dude. It's higher lows. Speaking of the Bitcoin price from when we crashed down to 80K back at the end of November, I mean, you could say that we're putting in higher lows here, right? That we're marching our way up. Do you feel like this is a base? Do you feel like that we've bottomed here?
I mean, you see this volume coming in. I don't know if you look at the volume ever, but and there definitely was some buying that was happening. It's kind of like in that natural zone where previous support was held. When you see a sell-off like we saw back, starting in November or that October 10th, time frame, it's going to take some time to work through it. I was posting about this, a little bit earlier this month or last month. It's going to take some time. Like the supply that comes to market needs time for the market to work through it, and you're going to see some chop here. Could that low be the low? It's possible. I have a feeling we're going to retest it before we move higher from here, and it's going to take several weeks to play out. So that's my it's my non-trading advice, but what I'm feeling in the market.
One interesting thing I wanted to bring up with you is if actually, speaking of Switzerland, if you price Bitcoin in CHF, Swiss francs, we hit 100K Swiss francs on inauguration day, January 20th, beginning of this year. And then what's crazy is that the dollar has been devalued so much over the course of 2025 alone that the 126K top just barely broke above 100K Swiss francs here, right? So if you price it in Swiss francs, we have not had a bull market all year, right?
Yeah,
Just been
I
churning.
mean, you could say the same thing looking at gold, which the gold bugs love to point out. It's been tough, right? Like gold has gone on an absolute tear, and for very interesting reasons, right? Like that people are starting to kind of look for a safe haven here, and because central banks and the powers that be that hold the majority of the world's capital are boomers and don't understand Bitcoin and don't really have easy access to it, or they don't have the systems in place to set it up. Gold has just absolutely been ripping. Is that going to continue? I think it might, right? Like there's definitely going to be some consolidation up here. But these types of trends don't just pop up and then go away. This has been a multi-decade really consolidation that gold went through before finally just blasting off. And the problems in the world that gold is being a hedge for in these big macro players, they have not gone away, and they're not going away anytime soon.
Were you a gold guy back in your finance days?
I was. Yeah. I was like a Ron Paul guy.
Yeah.
And so I definitely owned some gold, some physical gold. I sold it, I don't know, somewhere around the $45,000 Bitcoin range, and sold all my gold, all my silver. I held on to it way too long, by the way. Like if I had sold that a lot earlier, I'd have a little bit more Bitcoin than I do. But yeah, no, I have sold all of that stuff.
Yeah, what's crazy is that gold, I mean, it peaked here in 2011 around $2,000 and then went through this chasm and then was just banging its head against it until 2024, right?
I mean, look at that chart pattern, right? That's a classic cup and handle, beautiful thing. But look how long it played out. Like if you are a gold bug, that was a really long consolidation, and you know that it's probably going to resolve to the upside because it is hard money, at least relative to fiat currencies and the way the credit market works. But man, that is tough to watch, especially when you see Bitcoin coming onto the scene and just like eating its lunch.
Yeah. And what's crazy is that if you compare gold to the S&P 500 since like the mid 90s, gold is now outperforming the S&P over the last 30 years, right?
Yeah,
I mean,
that is absolutely crazy. Yeah. That like throws a lot of traditional finance people's worldview for quite a loop, right? Like the Warren Buffetts of the world saying gold has no cash flow and there's no reason to own it because you'd rather own profitable growing businesses. Well, that makes sense in a world where gold hasn't done anything and it's easier to justify. But I think it totally misses the entirety of the store of value mechanism that people are actually looking for, right? Like the stock market, this is perfectly apt for Vanguard, right? Because Vanguard is known for making ETFs and wide ranging mutual funds and stock market funds very affordable for people, and it's used as the primary savings vehicle for the vast majority of people, at least in the US, is these kind of like broad-based funds, whether it's the S&P or the NASDAQ or the Vanguard Total Stock Market Index Fund, which is what I started saving in, when I started to recognize the power of achieving financial independence early in life. And Vanguard, using that as a store of value as opposed to like an investment, like a lot of people think about it, I think that really conflicts with people's worldview on holding cash flowing businesses versus gold, when you could have just been holding gold. You don't have to like analyze all of these companies, which is why people buy these like broad-based index funds to begin with, is that they can't do the work, and they don't want to do the work of actually investing and analyzing companies and their balance sheets and their cash flow projections and PE ratios and all of that kind of thing. They're just looking for a good place to save their money.
Of course, to store the value that they worked for to gain, right? And yeah, with fiat, you got to spend half your time making the money and half your time learning how to invest the money. So it's a full-time job learning how to digest these markets, understand them, and actually make a profit in the long term. So yeah, Vanguard has been in the job of making sure it was simple for people to invest their money. And for the longest time, they said, no Bitcoin, we're not doing that. It's too volatile. It doesn't belong in a long-term portfolio. Well, all that changed last week, as Vanguard shifts its long-held stance and allows trading of regulated Bitcoin ETFs and mutual funds, giving 50 million clients exposure as growing demand drives the policy change. This was huge news, right? So when the Bitcoin ETFs launched in January 2024, Vanguard was very clear and said, no, we are not allowing this on our platform. This is not for our 50 million clients. So then BlackRock had the best performing ETF launch of all time with IBIT, and Vanguard was sitting there twiddling their thumbs. Then their old CEO, I think his name is Buckley, he retired at the end of 24. Maybe due to this, and then was replaced by this guy who is a BlackRock alumni, who was part of the Bitcoin ETF move, getting it all set up as it was launched. And now they allow Bitcoin ETFs for their clients. So this was a huge deal, and just shows you that over the long run, Bitcoin is the river, right? And these rocks, these financial institutions, are just going to be worn down by Bitcoin and the math and the perfect, absolute finite scarcity of this asset, something that we've never ever seen before. And they can't compete, right? So they need to bend the knee. They need to try to get in on the game, and they want those ETF fees. So they're going to play. Was this a huge surprise to you when you heard the news?
It's a pretty incredible about face for Vanguard after coming out with such a like bloviating stance about this, like early on in the ETF, launch journey. And I never thought that made any sense at all, right? Like they made things like MicroStrategy available to their clients, but and like the Bitcoin miners, you could buy that on Vanguard or as part of those funds, but you can't buy like the base asset in terms of the ETF. That just didn't make any sense to me. It's weird how some people like just can't get past whatever emotional biases they have that end up with egg on their face. I think ultimately, like Bitcoin, people will bend the knee, because one of Bitcoin's biggest strengths is that it just doesn't go away. You can't kill it, and it doesn't go away. It's always going to just be there under the surface, block by block, ticking forward. And as the price increases, it becomes harder and harder to ignore. And so when you see Bitcoin from the time that the ETFs launched go from 40,000 to 125,000, and all of your customers are looking at you like, why can't I buy this? How did you let me miss this move? I would have had to move my money out of Vanguard. Okay, well, I guess I'm just going to do that so that I can get exposure here. Or I'm not going to put more money in. I'm going to go to Fidelity, or I'm going to go to, name your other brokerage firm. It becomes harder and harder to justify some kind of strange, emotionally based or what they claim to be a principles based stance on just losing out on so much market share. Makes no sense.
Yeah. And at the end of the day, you got to give people what they want, right? People can vote with their feet, move their money, and take away your business. So you got to do it for your bottom line.
Right. The customer is always right. That's not to say that there isn't a place for having a principled stand in business and doing things that you think are right for your customers. But it does seem like they just made this very strange, like lone man type of stance on something that has generally become widely accepted and already was there by the time that this ETF launch was going. So it just didn't make sense for them to stand out as taking a stance on this. And we see the effect.
And we see the effect, yes. And there was no real fanfare or anything, right? The buy button was turned on within their 50 million customers brokerage app. So just sort of putting their head down and saying, okay, we messed up. Here, you can go buy it now. And that coincides with the other market news of Bank of America's private wealth and management arm, valued at over $2 trillion, will now allow wealth advisors to recommend a 1 to 4% crypto allocation starting in January, focusing on 4 spot Bitcoin ETFs. So yeah, the only ETFs that they're offering at first are Bitcoin only. And previously, these 15,000 wealth advisors were not allowed to bring up the word Bitcoin to their clients. High net worth clients could ask for it if they wanted in their portfolio. They would buy it for them. But when it comes to recommendations, this is completely brand new. And so we see this number, this 1 to 4%, BlackRock, Fidelity, the big boys, they recommend this, just dipping your toes in the water and trying it out with 1 to 4%. But of course, as we know, as Bitcoin grows, that 1 to 4% can turn into 8, 12, 20% of your portfolio over the course of a year, right? So it's pretty crazy to see Bank of America and Vanguard in the same week. What do you think about this? Wealth advisors, do you think wealth advisors will have a job within the next 10 years or so with AI and Bitcoin making the choice so easy as what to do?
Within the next 10 years, for sure. I don't know if wealth advisors as a profession is going away, but this is definitely a very huge signal for the broader advisor world, right? Like if you are sitting here and you can't talk about the best performing asset proactively with your clients, and even if they ask, you have nothing really instructive or intelligent to say on the subject, you're going to be at a competitive disadvantage. And I've been talking to advisors in my role at Unchained for a very long time. And when I talk to advisors who are interested in Bitcoin, they basically were like very few and far between, right? It's like there are very few advisors who actually understand Bitcoin, actually understand how to incorporate it into their the financial planning and the tax planning that they're doing with clients. And if you are one of those people, you will stand out as kind of a diamond in the rough of people who just have no clue. And you will gain a competitive advantage to doing that. The Bank of America doing this, as one of the largest banks in the world, is definitely a bellwether type of endorsement for Bitcoin and for just saying like, this is okay to do. And you're going to continue to see other advisors and other shops come into the fold and start to bring Bitcoin in as kind of a normalized asset that is, it's okay to own. And hey, we probably should get a little bit of exposure to this to balance out a portfolio to make sure that we don't miss the next move. And we're getting the best Sharpe ratio for our clients' portfolios. So yeah, nothing but bullishness there.
And part of the financial advisor business is looking smart for your clients, right?
Mm-hmm.
Like I found this thing. It's gonna blow your mind, right? It's gonna change your portfolio and make your life even better. You're gonna be wealthier and wealthier as long as you have this. And so you need to be open to all the latest innovations. And the fact that Bitcoin has been closed off to this sector of the majority of wealth in America who work with these financial advisors, and now that's finally open, it changes the game. It changes the game, absolutely. And
yeah, I mean, one thing to keep in mind is that generally speaking, wealth advisors are kind of a do no harm type of stance here. They're very conservative, and they're very conservative because the incentive model kind of forces them to be conservative, right? Like the the last thing you want to do is lose your client's money. It's okay if you don't necessarily outperform or make your client's money, as long as, you're not like losing too bad. But if you make the wrong move and lose a bunch of money, that's a surefire way to get fired and lose those assets under management, and therefore lose the fees that you're raking from that. So it's not surprising that it takes them some time to actually get over the hump and figure out how to actually incorporate this. But I wouldn't necessarily expect that we're going to see advisors coming in and recommending like a 20% allocation. Some might, right? Some might, but it's probably going to stay in that like small 1 to 5% type of allocation, similar to the way that they might be advising people to buy gold.
But pre-ETFs, it was much harder for them to advise clients to get into Bitcoin just from a business perspective, right? Because
they didn't have a easy way to gain fees on that, or something that like something that is compatible with the systems they use, right? So even if they wanted to talk about Bitcoin, even if they thought that their clients should get into it, there's this conflict in incentive structure. It's like, well, I don't want to sell away, right? I don't want my clients to sell assets that they have with me that I'm earning fees for to buy something else, even if that might be in the best interest of their clients. I'm not like advocating or saying that people are like not doing their fiduciary duty, but it's obviously very defensible to just say, oh no, this is too risky, I'm not going to do this. But there is that underlying economic incentive that is there that really you shouldn't ignore. So again, there's going to be more and more of these shops that are able to talk about Bitcoin in the construct of a full comprehensive financial plan. Actually, Unchained, we have a sister company called Gannett Trust. It's a Wyoming-based trust company, and part of that business is Gannett Wealth Advisors, who does exactly this. It's like people who understand Bitcoin and can help Bitcoiners incorporate their holdings into a more comprehensive financial plan. And so kind of leading the way there, but you're going to start seeing this pop up all over the place.
Do Gannett Trust Advisors have a recommended allocation for Bitcoin? A
I
percentage?
am not in a position to discuss any of that stuff. I wish I could. I don't
Understood.
know.
Well, the other big news in markets this week, Charles Schwab will launch spot Bitcoin trading in early 2026, confirmed by the CEO. And analysts say fees below 0.5% could pressure crypto exchanges that rely on higher trading charges. So yeah, huge news. Charles Schwab had hinted at this, that this was coming, but now it's finally here. Starting in 2026, you're going to be able to buy spot Bitcoin in your Charles Schwab account. Crazy, right? And Charles Schwab business model is about slashing fees, being extremely competitive in that regard. And that puts a lot of pressure on the regular exchanges, the Coinbases, the Krakens, right? Who make their living off of higher fees, because this used to be a niche product. Now it's completely mainstream, and it's a competition of efficiency, ruthless efficiency, and low fees. What does this mean to you, Charles Schwab spot Bitcoin crypto exchange?
Yeah, I mean, it's just another domino to fall, and it's the fee pressure that will come from banks and brokerage houses like Charles Schwab coming into the fold to offer Bitcoin and actual spot Bitcoin in terms of trading and availability for people to hold balances in. That fee pressure is real, and so the exchanges and anywhere that you can buy Bitcoin, it's going to drive those fees a lot lower and make things a lot more efficient. That will drive more trading activity, more volume, more market depth, which will make Bitcoin a little bit less volatile. Hopefully we'll see about that. It's hard. That's kind of hard to predict with a perfectly fixed supply asset with a lot of people who don't understand it yet. But over time, right, like that's what you would expect is it to behave more like some of these deeper markets, like stock markets, where, let's be honest, like the trading commissions and fees are extremely low for, even large amounts of moving these assets.
And would you be able to take your Bitcoin off the exchange, of Charles Schwab?
And that is a key question, right? Like, and if you can do that at Coinbase, but you can't do it at Charles Schwab, it does put Coinbase at a competitive advantage relative to the amount of people who want to actually have that functionality.
Yeah.
I don't know if you are the fee question is actually really important here, right? Because there are certain contingent of people who don't mind holding Bitcoin IOUs. They're going to buy the ETF, but the ETF has like some fairly high fees, right? Like it's anywhere from 20 to 25 basis points. Over time, that adds up to a lot of fees that are being extracted from the value that you are holding in that Bitcoin. At least in dollar terms, like you still may be, doing perfectly fine, but like that's a large amount of opportunity costs and a drag on your returns. If Charles Schwab is offering spot Bitcoin, well, what does that look like in terms of a custody fee? It might be free. And if that's the case, maybe it makes sense to buy Bitcoin spot, even if you don't plan on taking custody for it. The same way that, there's not necessarily custody fees if you're buying Bitcoin on Coinbase, but they're relying on the trading aspect of this for the majority of their fees that are incoming.
That makes a lot of sense. Okay, so that's the big three. Vanguard, Bank of America, Charles Schwab, all within 1 week. We've got BlackRock on board, Fidelity, the biggest names, right? So what's left? How much more could Wall Street do to placate Bitcoiners? Are there any holdouts in your mind that pop up when you think of Wall Street being scared or not liking Bitcoin anymore?
I mean, there's still a lot of work to do in terms of the understanding of people on Wall Street. Most of these people do not actually understand the value proposition. More and more people are coming, right? You've got BlackRock as an example. You've got Fidelity out there educating people and providing the right content and resources that are, let's just say, fit into the style that people like of in those circles like to consume their information. It's speaking their language, right? Which is very important when you are trying to convince somebody or help people understand what something like a new concept and a new way of looking at the world. But that does take time. And I think like there is institutional acceptance of Bitcoin. I think the vast majority of people look at Bitcoin where they used to say, okay, that's like a tulip type thing. Although, man, I just can't believe that we keep hearing the tulip argument every once in a while. It's just unbelievable to me at this point. Anyway, put that aside. You have people broadly have gone from, oh yeah, Bitcoin is a tulip phase and will go away to, oh no, Bitcoin is here to stay. It's too risky and too volatile and I don't understand it, but it's not going away. Yeah, it is something that's out there. Like if you look around your social circle, I'm curious how many people own at least a little bit of Bitcoin in whatever form it is, right? Whether that's exposure through the ETF or they own a little bit on Coinbase or they're actually holding their own keys. Very few have a material amount of Bitcoin. That's my experience in my group of friends and family. But some of them do, but most of them don't, right? It's an immaterial amount relative to their net worth. They just own some just because, I mean, a lot of people own it. Of course, you're going to have a little bit. It's kind of an experiment or just a fun little thing that they can say that they own.
Yeah, education is key. And is Unchained a part of this process? Are you guys going out, reaching out to any of these firms and saying, hey, let us teach you a bit about Bitcoin? Like, how does Wall Street get their education?
We do a lot of education, just generally speaking in the content that we're putting out and the podcasts and the blog articles and all of that kind of thing, but also more in-person type stuff. So we speak primarily with a lot of high net worth individuals and family offices and asset managers and that kind of thing. Earlier this summer, I was sitting in the offices of an S&P 500 company, helping to educate the CEO and CFO who are considering a very large allocation for their corporate treasury as well. So those types of conversations do happen. Unchained has some very, very deep expertise and knowledge across the group of individuals who work here. And so, if there is anybody out there who is looking to understand Bitcoin very deeply and natively, we can definitely provide that as a service for you.
Yeah, it definitely seems like Bitcoin is a bottom-up phenomenon, of course. And so you'll have those Bitcoiners that find themselves in these S&P 500 companies and sort of are the infiltrators, those who spread the knowledge of Bitcoin and keep knocking on their boss's door and saying, hey, you hear about this thing called Bitcoin? Until one day it finally clicks, right? And you're starting to see more companies, of course, turn towards Bitcoin and want an allocation. And,
that's exactly how it happens. There are individuals who are highly passionate about Bitcoin and they understand it very deeply. And all it takes is for those people to get into positions of influence within those organizations for the conversation to start coming up naturally or unnaturally if they're really pushing for that, right? And so, but you have to remember, these companies, these organizations are very slow and meticulous by design. They're bureaucratic by design so that they are protecting the capital that they are entrusted with by their shareholders. And so it does take a lot of time for people to come over the learning curve of what Bitcoin is and how it can fit into their organization and how it can work best for them as either a treasury strategy or even incorporating payments or anything like that. So be patient, right? Like, again, Bitcoin's biggest strength is just that it doesn't go away. It's just always there. It's always going to kind of float to the surface in people's mind over time because it just doesn't go away. And those touch points, every touch point that people have solidifies it in people's mind as something that is here to stay, that is important in the world. The more and more people who are talking about it, who are in positions of influence that they look up to, the more and more that feeds into their worldview of saying, okay, this Bitcoin thing, maybe something I should look into as well. And it just has that reverb effect.
And one man who has done maybe the most education in Bitcoin over the last 5 years is, of course, Michael Saylor. He is on the biggest stages talking to some of the most influential people, hanging out at Mar-a-Lago. But he's had to make some moves and some pivots with his business as they've gone parabolic a year ago and have been grinding down over the last 12 months in terms of stock price. And so they made a move that left some scratching their head and others cheering wildly. Last week, they established a $1.4 billion reserve fund for strategy, MSTR, through its ATM share offering to support preferred stock dividends and interest obligations, with plans to expand the reserve to cover at least 24 months of payments. So this was quite the move. When Michael Saylor started his Bitcoin accumulation plan, he had $500 million sitting in cash, and he looked at it as a melting ice cube, something that he could not go to sleep at night knowing that was just sitting there losing purchasing power. Well, he just raised $1.5 billion of an ice cube to sit there and to pay the dividends of his preferred shares as they have transitioned from really trying to grow the price of their common stock, it seems, to pumping their preferred shares and making sure that they are the vanguards themselves of a new thing called digital credit. Bitcoin he calls digital capital, and now they sell digital credit. So they tried to alleviate a lot of the market's fears. There was all this talk of MSTR is going to be insolvent if Bitcoin goes down to 74K. Of course, that's a lie. That's not true. But there's a lot of questions as to how will they continue to make these dividend payments on their preferred shares if we see a prolonged Bitcoin drawdown. So they sold $1.5 billion worth of MSTR shares onto the market, diluting the common shareholder by $1.5 billion, and raised this cash stockpile to defend them and their operations. So tell me, Trey, was this a 5D chess move or a desperate attempt to calm the markets?
It's not optimal from a like Bitcoin returns move. Like the optimal strategy is to be 100% in Bitcoin. But I think you have to look at this move in the context of all of the different, plays that are going on. You've got certain index, providers like MSCI talking about kind of pulling them out of the indices. You've got a lot of people in probably the administration and in the markets at some of these wirehouses and all of that who don't really understand that 100% Bitcoin is the optimal strategy. And so I think, knowing their team a little bit, having the pleasure to know them, they're not one to react, I don't think, to these like unfounded fears about liquidation happening at 74,000. That's not the case. But I think in taking a step back and looking at the larger impact of what they're trying to do, even though it's suboptimal to hold this amount of cash, it might be a net positive for them relative to the alternative, to allay some of these fears that are coming from perhaps S&P inclusion, the MSCI stuff, and all of the other institutional investors who are looking at the preferreds as providing a level of exposure that they would be looking for, but they're also trying to just answer these questions in their mind of, okay, how exactly are these dividend payments going to be paid for? And they're looking for, by definition, if you're going out to these prefs, you're looking for less volatility. And so they may also be looking for a solve for the perceived volatility of what those dividend payments could be coming from, which might have to be selling Bitcoin if they don't have this cash reserve.
And it seems as if the new flywheel, of course, is trying to get these preferreds going, right? Once they hit their par level, then they can sell anything above that to buy Bitcoin with, and people can receive their 10%, 11% coupon, and MSTR can assume all the volatility risk and accumulate more and more Bitcoin, right? That's the goal. But in the meantime, anybody who bought MSTR is just a punching bag right now, right? You are seeing your the value of your shareholdings get obliterated, down 60% in like 2 or 3 months. It's tough to watch if you are just a MSTR common shareholder.
It has definitely been a tough trade. And, back in the summer, I actually wrote about this in my newsletter. There was MNAV madness going on, right? Like there were people out there who were talking about MicroStrategy, but also other Bitcoin treasury companies as if they could do no wrong, as if, these multiples that people were paying were absolutely sustainable and would continue to expand. And I issued some words of caution about that for sure, which turned out to be kind of prescient and pretty timely. But really, like if you're looking at strategy, which I think has to be looked at separately than the other Bitcoin treasury companies, it kind of has behaved as a levered Bitcoin exposure type of a product, right? Which is that it outperformed Bitcoin on the way up and it's underperforming Bitcoin on the way down. And that's kind of exactly how the MSTR common stock has been portrayed, not only by the management team, but by a lot of the people who have been advocating for exposure there. And so, I don't think that you can be too upset with the actual performance of it. Aside from just, everybody was expecting that we were going to get much more price movement on the underlying Bitcoin price that would accelerate this, the multiple and the share price of MSTR, so that people would be able to recognize more outside gains above and beyond the Bitcoin price. And, this market has just been weird. It's just been a weird 2025. Who knows how 2026 is going to play out? But I think I saw Lev out there in your comments, and he mentioned this yesterday on X. I think for the most part, you need to, exactly right, stack sats, not strats, right? Like make sure that the foundation of your Bitcoin exposure is hard, cold Bitcoin, BTC in cold storage. Come talk to me at Unchained if you've got any questions about that. We can definitely help. But if you want to play out the risk curve a little bit, just make sure that you understand what you're getting into, and make sure that that you've got this foundational Bitcoin exposure before you start stacking all of these different strats, like the preferreds at MSTR itself, Metaplanet, all of these other Bitcoin treasury companies, because there's a lot of extra risk that you're taking on that are not nearly as transparent as when you are buying Bitcoin.
You're absolutely right, Trey. As you say, as Michael Saylor says, you got to start fundamentally with Bitcoin. Bitcoin you have in cold storage, Bitcoin you bought yourself, not something that somebody else holds for you. And so when you're getting access to Bitcoin financial services, historically, it's been slow. It's been clunky. It's been scattered across all these different platforms, each with its own limitations. But here, our good friends at Rhino, the sponsors of the show, they are changing that. Rhino is a next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. Here's what you can do with the Rhino app. Of course, you can buy Bitcoin with some of the lowest fees anywhere. That means more sats for every dollar that you spend. You can make lightning payments over the Lightning Network, of course, instantly send your Bitcoin anywhere. with near zero fees. And then there's the option to send cash globally. If you got friends or family anywhere else in the world, they don't have Bitcoin, they don't want Bitcoin, they just need cash, you can send them funds over the Lightning Network. They receive it as the cash of their native currency. And of course, you can set up automatic savings, DCA, set limit orders, set percentages. If it goes down a certain percent, boom, automatically buy. And so you can stack sats on your schedule and build wealth over time. And this is just the beginning. Coming soon, Rhino will let you pay your bills, borrow against your Bitcoin, and even save for retirement, all seamlessly inside the app. And of course, security is a top priority. With Rhino, they protect your Bitcoin with biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin will never, ever be rehypothecated. For long-term Bitcoin holders, of course, you can take your Bitcoin and send it to a single sig hardware wallet, or if you use Casa for multi-sig, they are partners with Rhino. So you can use your Rhino app as one of the keys for your multi-sig. So go today to rhinobitcoin.com, as you see on the screen right there, and you can get $10 of free Bitcoin if you use the code Bitcoin News, one word, Bitcoin News, and they'll set you up with an account, get boom, $10 of Bitcoin. Who knows how much that will be worth in the years ahead. So go check it out. Rhino is built to help you keep you in control of your Bitcoin every minute of the day. Very thankful to Rhino for helping us get this show on the air. I'm very thankful to have Trey on with us today. So Trey, let's close it out. Another thing I wanted to bring up with you is the fact that, of course, we've got our good boy Jack Mallers. He's starting his Bitcoin treasury company this week. 21. They just moved 43,000 Bitcoin out of escrow and into their coffers as they start trading tomorrow on the New York Stock Exchange. This, of course, is a joint effort between Jack Mallers, Tether, and SoftBank. So we've got people representing many different continents: Europe, Asia, Japan, USA, Jack Mallers. And a cool thing with 21, of course, is that their Bitcoin is auditable. They're doing proof of reserves, something that MSTR has not done as of late, or has ever done. And I think 21 wants to take a slightly different approach to the Bitcoin treasury company. They want to offer financial services and not just be somebody who accumulates Bitcoin and sits on it. So have you ever met Jack Mallers? And what do you think about this new endeavor?
Briefly, in the last couple of years, like, I've got a lot of respect for him and everything that he's built at Strike over there as well. And I listen to his podcast, and I think he's got a lot of great insights. It's kind of a powerhouse team, with him and Paolo and the Tether folks and Cantor as well. So you said they're trying to do things a little bit differently. I mean, they're going to have to, right? Because it's been a very, very, like, if strategy was a tough trade, the rest of the long tail of Bitcoin treasury companies have been even tougher, really, really, really tough. And so, I wonder how much this kind of delay or time frame that it took for Jack and the team over there to close this deal actually works in their benefit, because they're kind of coming on the back end of all this premium compression that has happened across all of these other companies, and perhaps they're getting in at the bottom of the next move here, and we'll have to see how that plays out. But I got a lot of respect for everything that Jack has built over there, and if anybody can put together a winning team for a Bitcoin treasury company, I think he's well ahead of that.
Yeah, Jack, haven't met him myself, but seems like a great dude. Was having a podcast with Marty Bent last week. We were going over 2025, and Marty's pick for Rookie of the Year was Jack Mallers' podcast, the Mailbag Show. Yeah, once a week he goes on and just rants for an hour and does an amazing job of tying all the pieces together, explaining it simply, especially for new people, right? We need to get the Gen Zs in here, and I think Jack Mallers is just the kind of guy to do it. So yeah, I wish them all the luck in this new endeavor, finally launching 21. I mean, when they put together the investor deck, it looked like they wanted to be an MSTR killer, not necessarily, but that was their main competition, right? They made it very clear that they're coming for the king, and they've got the kind of team that could potentially do it. So let's see what they get up to in the months ahead.
One of the things that is interesting juxtaposition here is that, when you are a Bitcoin treasury company, you're wanting to accumulate as much Bitcoin as you possibly can. And the paradox is that that's much easier to do when the price is high and ripping than it is when the price is low and falling, when you could get more Bitcoin for your money. But like, those premiums are needed to be able to extract value out of the fiat financial system in order to buy Bitcoin. But you can only do that if things are ripping, which means you're paying a higher price. So it's tough, man. It's not an easy game.
Yeah, and I think a lot of people realize that between shareholders and the people who launched these companies this year. So power to them. Hard lessons, but that's the market, right? I mean, it's not a playground. It's a battle arena. And one last piece of news I want to cover with you. This weekend you were talking about your Hoosiers, right? Indiana.
Yes,
You were very
what a win, man.
Did you go there?
I went to IU. Yeah.
Okay,
I graduated in 2007. Indiana football has not been a good program at all. Like, one of the losingest teams in, all of college football, at least at the D1 level. And man, it been a fun year watching the Hoosiers actually come out and dominate and win some big games. I had a lot of doubts going into this Ohio State game because, Ohio State is such a powerhouse, and you just never know, how people are going to react in that type of a venue. They proved versus a win against Oregon out at Oregon that they are a tough team. And this win against Ohio State just like absolutely solidified the position that they hold as number one, which is awesome. I live just outside of Atlanta, and I'm surrounded by Georgia fans, and I'm a bit of a Georgia fan myself. So I'm really looking forward to an IU versus Georgia game. That would be a lot of fun in the national championship.
That would be epic. Yeah, I mean, it seems Indiana pulls the competition down into the mud, makes them play the game that they want to play, right?
So tough. Yeah, they're so tough defensively, man. And that game really was very much driven by the defensive side of things. Like, both D lines were amazing.
Yeah. Well, I bring up Indiana and your Hoosiers because Indiana just introduced HB 1042, which would require state retirement plans to include digital asset ETFs, allowing workers to allocate retirement savings to Bitcoin ETFs while adding protections for mining, payments, and private keys. Did you hear about this?
I did hear about it at kind of a high level. I mean, it's just another example of more touch points, more availability for Bitcoin exposure across all different types of ways that people are investing their money. And, the reality is that most people have the majority of their savings, if they have any, in retirement accounts and employer sponsored type retirement accounts, right? Whether it's 401ks or 403bs or, whatever the case is. And so having that in the menu of options is a massive touch point for Bitcoin, and is, obviously only bullish.
So yeah, we haven't seen too much movement on the strategic Bitcoin reserves. Texas finally did it. They became the first state to actually go out and buy Bitcoin, $5 million worth of the Bitcoin ETF, which they say they will transfer into actual cold storage Bitcoin once they get the whole entire process set up. But this is another way that states are getting involved, and it's just giving people the freedom to use their money as they see fit. You can take some of your money and invest it into Bitcoin ETFs through your retirement account with the state. And of course, they're also adding in protections for mining, for payments, and private keys, something that we've seen lots of the Satoshi Action Fund, a lot of their work goes behind pushing initiatives like this forward. So
yeah, and I love to hear that. And it goes to show that there must be some good strong Bitcoiners with a sovereignty focus, in front of them that are talking to these people and helping them understand the value proposition of Bitcoin, not just as like an investment vehicle for, a fund that the state is running, but also as a method of empowerment for the people itself and for the state itself, right? Like, in my mind, it doesn't make sense for Texas, for example, to build a Bitcoin strategic reserve that is just held in the ETF, right? Because like, Texas prides itself as kind of being its own independent country, so to speak, right? And what good is having Bitcoin that has all these layers of counterparty risk that is held by institutions that are outside of their control? No, if you're going to build a Bitcoin reserve as a sovereign state, as a sovereign country, you need to be holding your own keys and not outsourcing that responsibility to a company that may or may not even be in your jurisdiction. So, kudos to them for pushing it in the right direction.
And you just brought it home, tied it back into the intro. The question, is Bitcoin becoming too institutionalized, or will people maintain ownership over their own private keys and keep that sovereignty that only Bitcoin really provides? Trey, what an awesome hour. We really crushed a lot of topics there, and your insight was very valuable. You got the TradFi, you got the Bitcoin, and a great way of communicating it all. Thank you so much for your time.
Love it. I really enjoy the time, Rob. Thanks for having me. Anytime you want to have me back, I'm game.
Cheers, man. All right, tell people where to
go.
go.
Hoosiers.
Go Hoosiers, go Unchained.
Go
Where should
Hoosiers.
people go for Unchained?
Yeah, for Unchained, go to unchained.com. We do complimentary consultations. We can have a really good conversation about your particular situation and help you find the right path for holding your own keys and accessing the other financial services that we offer. I write a newsletter called Fire BTC, where I'm exploring the intersection between Bitcoin and financial independence and the retire early movement. So go check that out. It's free to subscribe. Otherwise, you can follow me on X at @TS_HODL.
There we go. All right, everybody. Thank you so much for tuning in to Bitcoin News Weekly Live. We send out the newsletter every Monday morning, 7 a.m. Eastern. Get it right in your mailbox.